Sharma from HDFC Securities now joins us to discuss market fundamentals and his top sectoral picks. Unmesh, good morning. Thank you so much for joining in. I want to speak to you first about banks. Now with earnings season around the corner, a lot of banks would come out with their business updates as well. A lot of banks have also highlighted deposit growth to be a challenge going forward. What is your call? Where do you find value within the private and the PSU banking space? Do you have a particular preference there?
So yeah, good morning. So last trading day of the year. So we are obviously seeing all the buoyancy of that and the expiry coming in. On the banks, I think if you look at the way we have positioned our model portfolio, we are actually while overall financials we have a slight underweight. I think on the banks, especially on the private sector banks and the large public sector banks, we are still quite positive. And this is across market caps, because the way in which we think about this is that, yes, there is some stress, some pressure, I would say, not stress, but some pressure on the deposit growth. But at the same point in time, for well-capitalized large banks, there is a fair bit of runway for growth going even from here. And on a relative value basis, they continue to look good. So if you look at our model portfolio, we have a fairly buoyant positions on things like SBI amongst the large PSUs, and then Axis and ICICI. So that's how we are playing this.
So Axis, ICICI, and SBI are your preferred picks in the banking space, right?
Yeah, that's in the model portfolio as well. Yeah, large banks basically, large banks with good deposit franchise. Yeah.
Got it. What about consumer staples? They've underperformed, but going ahead, also the expectation is that volume growth will remain muted. The margin expansion tailwind is behind with raw material prices going up and the base effect kicking in. So on consumer staples, any of the stocks make it to your buy list or on your your model portfolio?
No. So this is one of the big calls that we had made last year itself. You may recall, even September before we were discussing this same question, and our research team was quite negative for two reasons. One is that yes, in an inflationary environment you tend to see some earnings growth, but the volume growth was not coming through. And the other was that valuations never gave us support from that perspective. The underperformance is something that we are not surprised about. In fact, so on staples, while if you see across the market, given where the valuations are, we have brought everything closer to the benchmark, but at the same point in time continue to remain quite underweight on this. The only ones where we are close to benchmark actually is ITC, where we are kind of equal weight, but on the others, we are taking bottom-up calls where we are seeing earnings growth, like United Spirits, Crompton Consumer. That's the way we are playing this. So not expecting any major buoyancy from the consumer to come through.
So United Spirits and Crompton Consumers are overweights for you in your portfolio?
Yeah, in the model portfolio, yes.
In the model. And in IT, any changes in your model portfolio in the run-up to the earnings?
Yeah, so look, what we've done is in the IT space is that the way in which HDFC Securities looks at the information technology space is also to look at things like market infrastructure, because that's really tech-enabled ecosystem, even though it may not appear in the index as information technology. So if you look at whole IT, we are equal weight, but actually that is not because we have an overweight on the services companies. Infosys is our equal weight, but other than that, the way we have played this is that very selectively where we can see earnings upgrades coming through Emphasis and TechM is there, but we also have MCX, the stock exchange, and actually IT services in a sense, which is team leads. So that's how we have constructed the portfolio. We are not looking at services themselves. We've taken some money out of the services and given it to the IT enabled enablers, so as to speak, market infrastructure to create a portfolio.
So in IT and IT enabled services, Emphasis, TechM, MCX, and team leads would be your picks in the model portfolio.
Yeah, and BSE, because we are overall on the exchanges, we are positive.
And I was going to ask you about BSE, Unmesh, that you answered that as being your overweight. I wanted to stress a little bit on that consumer side, on the durables bit. You highlighted Crompton Consumer as one of them. It's early summer already. You can all feel the heat here in Mumbai. But how have you conducted channel checks within these durable names like Crompton, Voltas? and all these AC manufacturers, Blue Star, such companies, what are the channel checks suggesting? Because Crompton had an analyst meet recently. They said that they are expecting robust demands for fans going forward. Is there a channel check, and what is it suggesting if you have conducted one?
Yeah, so there was a note I think we wrote about 4 weeks ago where we were looking at the early stages because the inventory kind of build-up starts to happen earlier in the season. And at this moment in time, the expectation is that we are looking at a very robust season. Beyond that, honestly, specifically on the summer, we don't have much to say. But yeah, that is in line with what we are seeing.
You know, we were chatting with Vijay Sales earlier, and they were talking about a 15 to 20% kind of growth on a year-on-year basis for the room air conditioning business. And particularly last year also had a fairly muted base in February and March. Anything on the power side? I remember you were quite bullish on some of these power names. Considering stocks have run up quite a bit, PFC, REC, BHEL is up to 50% in the last 1 year. Any change in your assessment?
So power, we split up into two parts. One is obviously, okay. So top down, as we have discussed in the past as well, and given where markets are, we are a bit defensive in our portfolio. So what you will see is that if you add power and utilities, we have a 3% kind of overweight position, which is 6% of our portfolio is power. Now within that, the index name is NTPC, where we have a slight overweight. But what we've also done is, and off bottom up, there is CESE in there. But what you will notice is that what we have also done is that given that we have increased the cash in our portfolio a little bit, we've also put some of that cash to use in PG InvIT. So while it looks like there is a serious overweight on power, some of it is actually a kind of quasi-defensive move to put it in the power grid InvIT. So that's how we have constructed it. So yes, we are overweight, but that overweight kind of is looking a little bit more positive because of this defensive bet that we have taken on InvIT.
What about pharma, Unmesh? It's such a wide spectrum. Every company has its own speciality. You've seen a lot of deals being signed among companies, with one recently being done with Dr. Reddy's and Sanofi, Cipla and Sanofi. Biocon recently got a drug approval, diabetes drug approval in the UK. That stock is doing well today. What is your call on pharma, and is there a pecking order that you have within these pharma names? Is there a particular specialty that you're focusing on?
Yeah, so we have a new pharma analyst. He's actually come out with a flurry of reports. In fact, it would be interesting, just to discuss that separately. But we have gone from an equal weight in pharma in any case, and it works very well because one, it is very well exposed to the growth markets. The other is that it's also kind of quasi-defensive in nature, and on top of that, we have some fairly high conviction calls. Sun remains Sun and Dr. Reddy's, we have an equal weight. Okay, but the ones where we have a significant overweight, Cipla, Torrent, and Divi's. Now, is there a common theme running through? While yes, there is some positivity on the domestic business, but it's really, as you rightly said, very stock specific. Every one of these companies is now, operating in unique markets, has a unique product set. So we are overweight, which reflects both our defensive bets as well as our positivity on names like Cipla and Torrent.
Running out of time, Unmesh, so very quickly, I wanted to get your views on the luggage manufacturers, both VIP and Safari. VIP, the analyst meet, very bullish commentary coming in from the management. The stock is doing very well, but on an absolute basis, it's been an underperformer compared to Safari, but now has valuation comfort. What among the two do you have a call on, if you do have one?
No, unfortunately, we don't cover the luggage guys, but what we do have a positive view on is the fact that we believe that domestic travel, in fact, tourism in general is going to be a big theme. That could be one way to look at it, but no specific view on either of these things.
All right, Unmesh, we'll leave it at that. Thank you so much for joining in and sharing your views on a lot of stocks today. That was Unmesh Sharma of HDFC Securities. We'll pull up the 12-month comparison there between VIP and Safari, a very interesting one. Was just appeared on your screen. As I mentioned, VIP has been an underperformer compared to Safari over the last 12 months. Then while Safari is up over 80% over the last 12 months. Despite today's 13% surge, VIP Industries is still negative territory over the last 12 months. There you can see they're still down 7% over the last 12 months, while Safari is up 80% despite correcting from the highs of the year. Time for a short break here on Trading Hour. We'll get you more on the markets on the other side. Stay tuned.